Let's be honest. The magnanimous Luna crash was one of the worst crypto crashes of 2022. Over the course of 4 years, Terra Network and its leader, Kwon, climbed to prominence in the cryptocurrency world, only to suffer a spectacular fall from favor. An estimated $60 billion was lost when the Luna cryptocurrency network crashed, sending shockwaves through the worldwide cryptocurrency market. The Luna coin and the related TerraUST stablecoin are the subject of two separate narratives. In the wake of the collapse of Luna and UST, the cryptocurrency market saw a severe shortage of cash, leading to a further catastrophic decline in value. It has taken the crypto industry a long time to recover. But what's more important is where it stands today. Hello and welcome to Crypto Castle, where we explain everything crypto. Today we will talk about the Luna crash, the key reasons behind it, and where it stands today. Let's begin watching the video right away. What is Luna crypto exactly? You may have heard of TerraUST and Luna. Here's a quick explanation of what they are. There were a lot of moving parts on the Luna network before it fell apart. TerraUST, also known as UST, and Luna are two coins on the same network that are related to each other. Terra is a blockchain network that works like Ethereum or Bitcoin and makes tokens called Luna. Kwon and Daniel Chin of Terraform Labs made the network in 2018. The UST coin is an algorithmic stablecoin on the Terra network. It was made by Terraform Labs. Other stablecoins like USDC or Tether are backed by fiat money, but the UST wouldn't be. Instead, the value of UST would be backed by the value of Luna, which is a similar token. More to come on that. Stablecoins are supposed to be safe havens in the crypto space because they're supposed to always be worth about $1. The goal is to give investors a stable way to store value, unlike with other coins, like Ethereum. Luna was Terra's native token on the blockchain. It worked like Ether on the Ethereum network. In the Terra network, Luna played 4 different roles. A way to pay for Terra network transaction fees, a way to keep Terra's stable coin peg in place, using delegated proof of stake DPoS and Terra to confirm network transactions. Take part in the running of the platform by adding to and voting on proposals for changes to the Terra network. How much was Luna worth? Well, in April, Luna coin was worth about $116, but by the time it was taken off the market, it was worth only a fraction of a penny. Before that, the coin went from being worth less than $1 at the beginning of 2021 to making a lot of people crypto millionaires in less than a year. This made Kwon a cult hero among some small-time currency investors. There was a lot of stories in the news about how Luna helped regular people get rich. The price of the Luna token went up 135% in less than 2 months, reaching its highest point in April 2022. The biggest reason was that you could put your USTs on the Anchor lending platform and get a 20% annual return. Many experts thought that this ridiculous rate couldn't go on for long. The Terra blockchain was used to build the Anchor protocol, which was a decentralized market for money. The platform became popular because UST holders who put their tokens on the platform got a 20% return. Then Anchor would give the deposit to another investor as a loan. Many doubters wondered where the money to pay these rates came from. Some people thought this was a clear Ponzi scheme. At one point, as much as 72% of UST was put into Anchor because the platform was the main reason why Terra was in demand. What happened to UST? Before we look at this crypto disaster, it's important to talk briefly about stablecoins. A stablecoin is tied to a currency that is more stable, like the US dollar. Both USDC and Tether are linked to USD. Stablecoins are used to protect against fluctuations in the cryptocurrency market. Let's say that the price of Ether is $1,000. Well, one Ether could be traded for $1,000 USDC tokens. When investors think the cryptocurrency market is going to go up, they put their money in stablecoins to protect their assets. The UST coin wasn't backed by a real US dollar. Instead, it was a stablecoin that was based on a set of rules. People thought that Terraform Labs could keep the UST peg within the USD as a backstop by using smart mechanisms and billions of Bitcoin reserves. You have to burn Luna in order to make UST, so when the price of a Luna token was $85, for example, you could trade one token for $85. This deflationary protocol was made to make sure that Luna would grow in the long run. For UST to stay at its current value, one UST could always be exchanged for $1 worth of Luna. If UST went down, transfers who bought UST and then traded it for Luna could make money. Once UST lost its link to the dollar, which made it a stable coin, both Luna and UST went down. TerraUST was risky because it was not backed by cash, treasuries, or other traditional assets like the popular stablecoin Tether. The value of UST was linked to Luna through algorithms, which made it stable. Many experts didn't believe that an algorithm could keep two tokens stable. Why did Luna crash? The Luna's cryptocurrency connection to TerraUST, the algorithmic stable coin of the Terra network, was what caused it to crash. May 7th, more than $2 billion worth of UST was unstaked, taken off the Anchor protocol, and it was quickly sold for hundreds of millions of dollars. It's not clear if this happened because interest rates went up or because someone tried to damage the Terra blockchain. The big sales drove the price of UST down by $1 to 91 cents. So people started trading 90 cents worth of UST for $1 worth of Luna. Once a lot of UST had been sold, the stablecoin started to move away from the UST. In a panic, more people sold their UST, which caused more Luna to be made and more Luna to be in circulation. After this crash, crypto exchanges began to remove Luna and UST pairings from their sites. Long story short, Luna was left behind because it was no longer useful. Now, before we move ahead to what happened after the Luna crash, please take a second to like this video and subscribe to our channel so that we can keep bringing more informative pickleball content to you. Your little contribution means a lot for us. What happened after the Luna crash? Well, the Luna meltdown had an effect on the whole cryptocurrency market, which was already very unstable and having problems at the time. The crash of the Luna spacecraft is thought to have caused the price of Bitcoin to plummet and the value of all cryptocurrencies to drop by about $300 billion. Voyager and Celsius, two of the biggest crypto companies, have both filed for bankruptcy. Three Arrows Capital, 3AC, had no choice but to go out of business. Due to the Luna crypto crash, many people lost their life savings and had trouble making ends meet. You can find many of these terrible stories online with a quick search. Many Luna fans who call themselves lunatics used Reddit threads to talk about bad things that happened to them. One small-time crypto investor even said they lost their entire $20,000 savings in Luna. Those who got out of their positions before the crash were the only ones who came out ahead. Pantera Capital, a hedge fund, is a winner that we have to point out. They got back 100 times what they put in, which was $1.7 million. Before the collapse, the company sold its Luna stock for a return of $171 million. What happened to the Luna crypto founder? Kwon talked about a plan to fix Luna and for a short time in May. After the first crash, things looked good, but in the end, the coin fell. It was dropped right away. Terra finally came out with a new coin called Luna 2.0. On September 15th, it was said that Kwon had been given an arrest warrant by a court in South Korea. This happened almost 4 months after Terraform Labs' two tokens, Luna and UST, went bankrupt. Kwon and 5 other people are being charged with breaking local laws about markets. South Korean officials want to take Kwon's passport away because they think he's living in Singapore. In theory, if this case goes to court, Kwon would have to go back to South Korea within 14 days of getting the notice that his visa had been revoked. The request is being looked at by the ministry right now. Some people who lost money on Luna have told local prosecutors that Kwon was involved in fraud and illegally raising money. About 280,000 people in South Korea put money into Luna, according to estimates. The bottom line? Well, if you want to invest in digital currency or other assets with a lot of volatility, you have to accept that there will be a lot of risk. We hope that the collapse of Luna is more of a black swan event than the start of a new era. The most important thing to remember is that if an investment looks too good to be true, well, it probably is. Second, investors who are still optimistic about crypto over the long term should put only 5 to 10% of their portfolio into it. So what was your biggest learning from the Luna crash? Tell us in the comments. Don't forget to like this video and share with your friends and family. Also, if you like this video, then make sure to watch the next video on our channel. Thanks for watching. Bye.